Good morning, everyone. Thank you very, very much to all of you for making out here in the early morning and joining us here for Semafor's next 3 Billion on Tour event series. We're honored to be here in Abu Dhabi at Abu Dhabi Finance Week and to host you for this very, very important discussion on the forces that drive financial and digital inclusion across the Middle East, Africa, and Asia. My name's Guillaume Doan. I'm Director of Strategic Partnerships for the Middle East and Africa at Semafor, the world's fastest growing news organization. We're delighted and honored to see a number of familiar faces around the room and many of you who have joined Semafor's live journalism convenings in the past. For those of you who are new to Semafor, we are a disruptive and innovative global news brand with more than 1 million subscribers and bureaus in the US, Sub-Saharan Africa, the UK, and here in the Gulf. Our goal is to become the business and finance news brand of record in the Gulf and worldwide. An important differentiator for Semafor is that we have staked our future on high-quality convening. This morning's gathering represents the final of 100 editorially led events that Semafor has organized just this year. And we're very proud that today's event is the first that we're organizing here in Abu Dhabi and the wider region, and the first of many. Today, we're very pleased to host all of you for an editorially led discussion about Abu Dhabi's pivotal position at the intersection of innovation, investment, and inclusion. Amidst many conversations this week about large-scale capital movements, trade flows, market growth, we turn our attention to a different opportunity. How do we connect 2 billion people worldwide who remain excluded from the global economy? This is a conversation about the basics of unlocking cycles of poverty, bank account ownership, digital connectivity, and the railways of economic progress. We have an incredible lineup of speakers who will examine how capital and technology can work together to increase access and opportunity. I want to take a brief moment to remind you, everyone, that high-quality independent journalism requires the support of great brands and partners. A big, big thank you to the Gates Foundation for their funding and support of this entire series. And a huge thank you to our partners, ADI Foundation and GemCore Capital. And lastly, to the organizers of ADFW for all their hospitality and giving us a home for this important discussion. To kick off today's program, I'd like to welcome our Gulf editor, Mohammed Sergi, up to the stage for our headliner interview with Jayesh Patel, the CEO of Wio Bank.
Yeah, please join me, Jayesh. All right. Well, thanks again for coming and joining us this early morning on day 4 of ADFW. And thank you, Jayesh. I heard it's been a pretty rough week so far, but we're almost there. It's a home stretch. So why does the UAE need another bank? What were you trying to solve when you launched Wio?
So thank you, everyone, for showing up. Thank you for inviting me. I'll tell you the premise. We started about 5 years ago. And the premise behind starting Wio was the economy is changing and the world is changing. And there's the emergence of the new economy. And as you look at the kind of assets you need to drive this new economy, one of the biggest things I think the UAE realized is there needs to be a new enabler in financial services. So when we were set up, our objective was simple. Help us build a bank that enables tomorrow's economy. Tomorrow's economy is a digital economy driven by things like stablecoin, where entrepreneurs move freely around the world. You have a lot of changes. The billion-dollar companies are run by 30 people, not 300 people. So there's a lot of change coming. And one of the biggest realizations was that we need a new platform that builds natively for this economy. So that's where we started.
All right. So far you've had tremendous growth. Some of you have probably seen the headlines out there, and that just shows it shows that there's a market fit, right? So that's clear. How do you make sure that it is also inclusive in terms of the growth, right? So this is not just a bank for the wealthy. I think it's pretty much open to anybody in the country. So what are you doing in that sense?
Yeah, absolutely. So it's funny. We started during COVID. I had my interviews online. Maybe that's a blessing. That's why I got the job. But we started at a time where a group of the economy was really suffering, and that's the small business and the entrepreneurs. Yep. I remember the first set of conversations we had, all the data showed SMEs shutting down because they can't sustain themselves. Yeah. And if you look at the financial services industry in the UAE, the regulator came up with a ton of programs to help defer payments and stuff like that to help these businesses. But I think what became very obvious was that the banking offerings that existed weren't there to incubate these ideas. Yeah, they were more there to make money. And so we looked at it and said, we're going to solve one problem: help the smallest entrepreneur start their business and fulfill their dream. Yeah, so we could do it for retail and for individual, for SMEs. We focused on the SMEs. When we started our bank, you could only open an account if you are a single entrepreneur. Yeah, and we've grown from there. And today, 3 years later, we have the largest number of SMEs in the country banking with us. And I think that shows the power of serving the folks who have the small dream, who you know you're not going to make a ton of money from, but giving them the opportunity, because many of them have grown significantly over the past 4 years. So for us, this was key. How do we help develop entrepreneurs? Yeah, allow them to start their company. One of the biggest challenges we had in the UAE was, if you're an entrepreneur, good luck opening a bank account. You'll run through half your capital before you get your bank account. Yeah, we made sure you can open your account in an average of 2 days. So I think there's different ways of doing that. The second thing we did is we realized entrepreneurs start their businesses for passion. Yeah, they have, not to do banking. Yeah, so we built an operating system. Once you join WEO, we enable you to do everything. We help you plan your money better. We help you create cards so that you can plan expenses better. We help you to integrate to get payment services better at one standardized rate, no hidden fees. Yeah? Our principle is we want to make money when you make money, not when you make mistakes. And I think this operating platform made it so easy for entrepreneurs to run their businesses that we believe it contributes to them being more successful. So it's not just about the access to an account, it's the capabilities you provide so that their business actually succeeds.
If you can just elaborate a bit more about that, like the frictions that entrepreneurs or small businesses have felt, especially just in that initial phase of opening, and how did you remove them, right? So those barriers must have existed due to regulatory reasons, or is it just legacy bureaucracy?
Yeah, so banks globally are fat and rich. Yeah, and that is a challenge. We were starting with zero, so every dollar of revenue was great revenue for us. What we did is, in the UAE, you can set up a company in 52 or 53 zones. Yeah, we integrated with many of them. So as you opened an account, the biggest challenge with opening accounts is making sure you are who you are, you're doing what you're doing. You state you're doing. We integrated with the digital ecosystem. We're incredibly lucky in the UAE. We've had a fairly mature digital ecosystem, whether it's identity, whether it's data on company setup. Now, we are now going to start getting digital data on things like power of attorney and some of these other elements. Yeah? So the ecosystem existed. I think we needed to take advantage of it. We integrated with it, so we got documents easily. We created a seamless process to vet the documents and open your account. We also made it super, super simple for you to open your account, and streamlined a lot of the bureaucracy that's there. I think that helped us a lot.
Yeah. One of the, I guess, the new regulations that, and you obviously have seen it, so for the people in the audience, the UAE Central Bank removed the limits, or the lower threshold for income for loans. I think it was like 5,000 dirhams in monthly salary. So that's gone now. So that in a way opens up a lot of lending to the lowest income lowest wage earners. So is that like a space that you're interested in? Does this help you with growing assets further?
Yeah, I think, look, I think micro lending happens. It just, whether it happens in a regulated space or it happens outside. Yeah, and when it happens outside the regulated space, you tend to see practices that aren't great for consumers. Yeah, so it's phenomenal that this has been removed. Now, the way I see the future of financial services growing is you can be great at everything, but you can play a role in it. So, for example, ideally, you'll start seeing amazing fintechs going out and taking advantage of this. Yeah, as they develop the technology, algorithm, incentives to drive micro lending, they need a balance sheet. We have a balance sheet. So it doesn't mean that we go directly to consumers, but I think allowing many of these fintechs to go out, experiment, learn, I think they'll build better solutions, very frankly, than established players. What they do need is access to a license, access to capital or balance sheet, and we've got that. So I think we will participate in this. I think it's a massive market, and I really think it's great for the people out there who usually don't get easy access to credit.
We were speaking just earlier about, and you can see it all on the front page there, the stable coin, the shift to digital assets, or virtual assets that they're calling it. So, what do you see in that space, and really how do you educate your customers to delve into it? I know you have a vertical inside of the app. So,
yeah, absolutely. So look, I believe this is the biggest shift in money that's happened and is going to happen. Yeah, I'm a big believer in stable coins. You know, it's super interesting. We are going from a world where countries launch currencies to companies launching currencies. Yeah, and the implications of that are far-reaching. Yeah, I think what it does do is it enables the global economy to come together incredibly well. I give you an example. If I grew up in Kenya, if I'm an entrepreneur in Kenya, I know what my currency does. If I want to hold money in different currencies, there's a ton of regulations to get through it. Yeah, it's not easy to get access to these accounts. Now I can hold value in currencies that are stronger. Money movement. I was just telling somebody I sent some money to a country and the fees I got charged. It becomes cheaper, faster. And which is, I think, absolutely phenomenal. Yeah, because there is still a lot of friction in fiat movement of money. Why should I be paying X% of the funds I'm transferring to send money to another place? I think stablecoin is drastically going to reduce the cost. I think on the business side, what we'll see is if I'm ordering $10,000 worth of goods every time because of the friction that exists in fiat, now I can order $2,000 worth, and I can order 5 different goods. So I can start bringing more choice to the consumers. I'm a big believer. I think it'll drive efficiency. I think it'll drive more wealth creation for customers, and I think it will drive better pricing for consumers.
And are you seeing this growth in digital assets and crypto kind of on your from your customers in terms of holdings?
Yeah, so crypto is great because it's a speculative industry. Yeah? So every time somebody sees a WhatsApp on crypto going up, you see a spike. Yeah, I think stable coins is slightly different because it's fundamentally core to commerce and building wealth. Yeah, you asked, how do our customers see this? I have tons of customers for the past 6 months coming to me and saying, hey, when are you launching stablecoins? You know, we live in a world where information travels fairly quickly. Consumers are a lot smarter than they've ever been. Yeah, and I think businesses that believe consumers don't know will fail because they do. Yeah, so we have consumers around the country asking us, can you do this? By the way, I paid $25 in fees for that. Do you know in stablecoin, it would have cost me $3. Yeah, so the information is out there. And I think once people start using it, you'll see it spread very quickly. So I think consumers will adopt the technology very quickly.
And this is my last question. Something that we hear about in the UAE is that it's overbanked, right? So that was kind of swimming back to the first question of like why another bank. But one of the ways to overcome that is growing outside of the borders. And is that something you consider, because you are lean by definition of being a net bank, and the more users you can have, the better off you are.
Yeah, absolutely. Look, my shareholders ask me this every time I see them. I think, look, the UAE has incredible growth. If you just look at this event, I think every major player in the world is here. We have so much potential. The next decade there is incredible growth just in the UAE. We've just started, we did SME banking, we are doing individuals, we have wealth, but we see so many other things we need to build up. So our focus in the short term, yeah, is in the UAE, and then we'll expand. I also think the world of money and banking is going to change. Again, I go back to the point, when companies issue currencies, do you need to bank in the country you are in? Yeah? And I think you will see a shift in this in the next 5 years. Yeah? So we love to go to other countries when we've got enough share in the UAE. And then, and we'll also see how the movement of money and banking changes over the next few years.
Well, thank you so much, Jayesh Patel, WEO Bank CEO, and please the audience.
Thank you for having me.
Thank you very much, Mohammed, Jayesh. We're going to move on now to a little partner session. I want to welcome up to the front here the leadership here of Gemcorp, Marcus Whale, who's the CEO of Gemcorp ICS, and Assad.
Challenge on execution, you have challenge on operation. So the way we see it is how we can combine our strengths and our capabilities with our asset management side, regulated entity, plus our industry and technical experts on industry, where we have boots on the ground. So we have more than 500 people based in Africa, direct employees, and more than 10,000 indirect employees in projects that we manage. So we bring capital with execution capabilities and with operation. And we focus on the areas that you said, energy security, water security, food security, and essential infrastructure. So this combined solution bring us to a unique position that we can have origination capabilities in the ground, see the project that real brings impact, oversight this project during the implementation phase, and then operate these projects when they are ready. So this de-risk a lot the investment. The completion is one of the big challenges for emerging market, and with this solution we've been succeeding in delivering. We don't have any project that we touch that's not completed. We have very good returns to our investors. We have our clients happy because we are delivering. So this is summarizing, this is what Gemcorp is.
A real commitment from end to end, just ensuring that it follows through all the way to the end, not just financing it. And you know, a good example of this is you recently launched an African infrastructure fund. Can you tell me more about it?
Yeah, with pleasure. Thank you, Guillaume, and delighted to be here. Very quick side note, love the WEO app, especially the latest family function, so well done there. Ladies and gentlemen, absolutely delighted here to talk about the initiative. We haven't been accidental on the continent, as Marcus has been saying. Gemcorp has existed for more than 10 years and has deployed over $10 billion into emerging markets with focus on Africa. That is only scratching the surface. Once we started doing this, by the way, having deployed that, the good news is we got repaid, contrary to misperceptions that people have about emerging markets. Why? Because by doing this capital deployment, you bring utility value to the communities you operate. This is not a humanitarian undertaking, it's ultimately commercial, but the beauty of investing into emerging markets is that one does not have to trump the other. In fact, with every dollar you invest, you can transform lives of people and make good risk-adjusted returns. So having scratched the surface, we realized the problem is not the opportunity set, the problem is the capital. So that's why, in partnership with the Sovereign Wealth Fund of Angola, we're delighted to have launched a new Pan-Africa strategy, with the Sovereign Wealth Fund of Angola seeding that strategy, with the view to catalyze international capital, both from the region, global institutional investors, as well as the continent, to address a massive funding gap that is critical.
You mentioned this is not a humanitarian undertaking, but a commercial one. But ultimately, why Africa?
I can answer that. Actually, the answer was why not, right? Is where, of course, that it's commercial. It's of course we have the returns, but of course we also have the corporate social responsibility. So we do integrate with communities. You cannot come to any country and do a suitcase business, like we said. I come and from time to time I spend here. So I'm living in Africa for 15 years. So it's the reality. You need to understand the perception. So why Africa? And why I say why not? Because it's a matter of understanding the biggest youth population in the world. 60% of the arable lands in the world. Greatest energy potential. Greatest mine potential. Gap in infrastructure. Growth in the world is definitely through Africa. So the question is, why not? The risk perception that we see in Africa, it's completely, in our view, that understand out of the reality. So we've been working there, deploying more than $1 billion per year, delivering projects, and with very low unpaid rate, very low, very good returns, and projects being delivered. So you have excess of water for the water security and the energy project. You have excess of critical mining for the energy transition. You have the youth population, the high concentration of youth population in the road. You have a huge gap on infrastructure. Finding the right project with a proper capital allocation, with the risk mitigation, is the way that we can get things done. So the question is more, why not Africa? Right? So the road needs Africa, and the opportunities are there.
What about on the financial inclusion side? Where can you make an impact, and what have you done in the past?
Absolutely. This is a part of overall impact of what happens. One of the things that we've noticed, and this is ironic a little bit, is that the default rates are so low in Africa because of what we've observed in infrastructure. They're 2 times lower in percentage terms than you would see in some developed markets. Why? Because of the bankability criteria of a project. Subsequently to that, what we identified very clearly is that not only the default rates are low, the ones that have the least amount of wealth, as mentioned earlier, the microfinance, they tend to actually pay on time. It's usually where the means are available that you may have delays. So we've invested into a company called Jumo. This is not here to advertise the company, but it's a financial inclusion platform whereby credit is extended to those people who do not have credit history, to families that would not be able to otherwise support themselves by tracking data that's not traditional for credit scoring, and developing an algorithm, and through this impacting millions of families who would otherwise not have not only access to credit, but the ability to develop financial discipline, and as a result cater for their families. So this is only one of the parameters where we had the absolute privilege to see the transformation and then be encouraged to open new investment platform to address this gap at a wider scale.
Now, a lot of your strategy in Africa will be staged from here in Abu Dhabi. I think you have an ADGM registration here, and I think Assad, you're based here full time. Can you tell us more about that? Tell us more about the Gulf Africa corridor, how you leverage Abu Dhabi's positioning, and how all that takes place.
With pleasure. I'll be brief. The practical reality, we get asked this question all the time, like, oh, Gulf to Africa has been a lot of investment, over $100 billion from UAE alone, together with other countries. I almost want to zoom out for a little bit and say, look, this is nothing new. The trade between these two continents existed 1,000 years ago, way before European discoverers found the continent. So this is just a new wave of highly entrepreneurial people that we see on both continents that are used to centuries of trading, now re-engaging with the corridor. Why Abu Dhabi specifically? We set up here a year ago with a licensed fund manager based in the DGM. There were 3 drivers to this. In addition to the fact that UAE is showing incredible interest in investing into Africa, we also like the mentality, which is, I'm not just going to invest, I will enable growth, sustainability, independence, because what everybody wants is for assets into which you deploy capital is to graduate, i.e. go from the private capital land into bond markets. We have an example of a company called AfriCell. We invested into this. let it grow, and now it's there. Abu Dhabi is a critical global hub for mobilizing capital, including into emerging markets, with a development angle. The number of asset managers everybody knows here has grown by 40% year on year. We're delighted by the ecosystem, by the same ambition, by the focus and the patience of the capital, because guess what? Africa is not a continent for day trading. If anybody is looking for an opportunity within 1 week and an out, that's where you're going to get cut wrong. But if you have hard currency-backed opportunities, you take a patient view, and most importantly, you have an operational partner on the ground that will be seeing what's happening, that is the way to cater for success.
Why Africa? Why not? Perfect answer. Gentlemen, thank you so much for your time. Really, really valuable discussion.
Thank you.
Thank you very much. Thank you.
Thank you very, very much to both of you. We're going to move on to a panel discussion. I want to invite Semafor Africa Managing Editor Alexis Akwajiram, who's going to be in a panel discussion with Lawrence Paramasivam, the Senior Executive Director, Policy and Legal at ADGM FSRA, Ali Abul Hassan, the co-founder and CEO of TAP Payments, and Otto Williams, the Regional Head and GM for the Middle East and Africa at PayPal.
Hello and good morning. Great to see you all here. I wanted to start with you, Lawrence, and welcome. And just to give us a regulatory perspective, I wanted to get a sense of how do you structure the framework, the regulatory framework, in order to help fintechs to scale? And I know it's not necessarily your problem, but then for them to maybe look at entering other regions.
Sure. Might just take a step back about ADGM. So ADGM is the International Financial Centre here in Abu Dhabi, the capital of the UAE. We've been in operation for just coming up to 10 years, but I think the real success to being an international financial centre, it's a bit like building a house. You need to have really strong foundations. And for the ADGM, it was the decision to actually have direct application of English common law. It was the success of other major international financial centres, such as Singapore and Hong Kong, that really designed that. But I think what's made ADGM such a success is very much the UAE leadership and the Abu Dhabi leadership around pioneering and focusing on innovation and technology. And that's really been part of the key to the success. We've been able to develop regulatory frameworks looking at international standards, but also best practices. And part of that has actually been about working closely with the industry. A lot of our initiatives, our regulatory developments have been driven by the industry. So we were one of the first jurisdictions in the region to set up a regulatory sandbox for fintech operators to come, to explore, to expand, and for us as a regulator to learn and adapt. And so that led to the ADGM creating its digital assets framework back in 2018. And obviously, we heard the news this week of a major player setting up its global hub here in ADGM, and that's very much a reflection of that journey. But we continue to evolve. We've now got a stablecoin framework, and very much I think the gateway that Abu Dhabi offers is its location, its time zone. We're in a fantastic place to do business, but also to connect with the rest of the world, and Africa is part of that. In fact, I was looking through our website just today, and I realised that we, as a regulator, signed a MOU with the Capital Markets Authority in Kenya in 2017. So we've been working and engaging in and around this space for a while.
So, I mean, it's a combination of geography and in setting up the structure to be this global hub. I mean, Ali, I wanted to bring you in on this. I mean, what challenges have you experienced in setting up cross-border operations in terms of your company? Because this is a journey you've been on for just over a decade.
True. Well, the company started in Kuwait. We help businesses accept online payments across the GCC and Egypt. When we first started, I would say we kind of navigated the legal framework and the regulatory framework across the region. And I would say before COVID, the 5 years before COVID, it was still, I would say, developing. The 5 years after COVID, it started accelerating really fast here in the region. We are a regulated, licensed payment institution across the GCC and Egypt from central banks. And we found that in order to consolidate all those legal entities, we found that the best place to consolidate was ADGM.
And I mean, I always say this to people, this is live journalism. So, I mean, I also want to just get some news out of you. So, I mean, what are your plans for expansion? I mean, are you looking to Africa? I know I'm monomaniacal about Africa because I am the managing editor for Semafor Africa, but do you have plans for expansion and with Africa in particular?
Well, as mentioned earlier, there's a lot of links between the GCC and Africa. We are looking at North Africa. Starting with Egypt. We also believe that there is a lot happening that are linked from Morocco all the way to the GCC. We always keep an eye on markets like Nigeria, Kenya, South Africa. What is interesting for us to learn is when I get into conversations with companies or entrepreneurs that are based out of Africa, there is always this link to the UAE. And even when it comes down to travel between Africa, the transit is always UAE.
Why? Why do you think that is?
For me, it's a surprise to learn that. I remember attending basically a round table in Egypt with, I would say, a group of people from Africa. And I was wondering, why is it that UAE is the link? I guess there is a lot of investment of bridging between the African countries that's happening from the UAE and building basically a connection for the countries to come together. But I think it still has a long way, which is normal. Here in the GCC, we have a long way also. So we are in a very highly fragmented region that requires players to not wait for governments to put down the rails. Companies are actually taking steps and collaborating with the public sector to actually see how to bridge those rails. And I believe the results of the private sector focusing on bridging between the countries, I think is a result of those links.
And just very, very, very briefly, the time frame, when you mentioned you've got Egypt, you're looking at Morocco, what time frame are we talking about with Morocco, for example?
Still early to say that.
Okay, that's fair enough. Thank you very much. And then Otto, I wanted to bring you in on this. So my understanding with PayPal is that your model in Africa is very much based on partnerships. I'd love to hear more about that, and if you could share the details of that. I know you work with M-Pesa, for example.
Absolutely. Thank you, Alexis. And good morning, everyone. It's good to see this group bright and early. We are very focused on partnerships, and it is a global model. We recently announced partnership with OpenAI, ChatGPT, Perplexity, Grok, and a number of other players across the region, across Africa. And we cover, by the way, we've just opened our Middle East and Africa office here in the UAE this year to cover Middle East, Africa, and Central Asia, nearly 80 countries. And it is a partnership model, because what we realize is that there are lots of players across the region who have done the hard work of aggregating SMBs and also bringing services, financial services, and driving digital financial inclusion for consumers. And we want to empower those players. PayPal is a 25-year-old fintech. Now, fintech before the word fintech was coined, that's what that means. And we do have a significant amount of capabilities that we can lend to players who are skilled in their own markets. 25% of the world's e-commerce volumes flows over PayPal. Last year, we did nearly $2 trillion in volumes. And we've got over 430 million active accounts globally across the US, Europe, UK, and a number of other markets. Nearly 40 million sellers globally. And so it is a scaled two-sided ecosystem commerce business with capabilities that are relevant for the region. We own our own stable coin, pegged 1-to-1 to the dollar and regulated, PYUSD. We've got a hyper wallet platform for payouts. And so we find that a lot of the players in the region actually do want access to these global platforms and capabilities so that they can power global trade and commerce. Now, this is important. If you think about the continent and what we have to do to drive inclusion and expand access, we've got to empower SMEs. And when it comes to SME selling, SMEs really want to be able to have access to more buyers, to sell more, and to have working capital to be able to pay suppliers. Well, here on the continent, you find a lot of SMEs that are trying to sell internationally struggle. And they struggle because of the lack of trust. You've met a lot of buyers in the US or Europe who just don't know these merchants. But PayPal brings that trust. And so if you're an SME in South Africa and Kenya or Morocco that's selling to an American buyer, and that buyer has a PayPal account, and like I mentioned, over 430 million active accounts, that buyer knows that they can pay confidently without giving up their credit card number, and also have buyer protection. And so they can actually purchase from that SME. And so we're actually seeing a lot of SMEs seeing more payments and more volumes. And just on that point on trust, if we've got time, I'm happy to speak to a trust framework that's also related to agentic commerce, because we're seeing some movements there. But I think one more point that I'll make is the freelance community. The continent is very young, and a lot of freelancers doing work for international companies and getting paid. And so just driving employment. PayPal's helping to deliver those funds to freelancers. And they've got the FX and the currencies to be able to make international payments and purchase from suppliers as well. So that too is important.
I mean, and trust is huge with money, with all of these things. I think we all know that. And why not trust a company that's a quarter of a century old? I mean, that's essentially what you're saying. There is huge potential with regards to Africa's booming population. So much of the continent, when you talk about SMEs, we're talking about the informal economy, aren't we? And trying to bring people into the formal economy. And a way to do that is exactly what you're talking about. So that makes me ask, well, what next? In terms of plans for the future, scaling, ambitions, what next with PayPal in Africa?
Yeah, that's a great question. So we announced a $100 million investment in the region, and we are going to continue to deploy funds and resources to scale and to empower the continent and the Middle East and Central Asia markets. It will include venture investments, and we've done a number of those. We're invested in Tabby here, in PayMob, and in Stitch in Africa, and we'll continue to deploy more ventures. We've got our PayPal Ventures that does that. We're looking at bringing more of our capabilities. We're looking at hiring staff across the continent, across the region to continue to scale the business. Now, when it comes to capabilities, this is very important. You mentioned the population growth. We just announced a new platform called PayPal World, and this one that I'm leading globally for the organization as well. PayPal World is a wallet interoperability platform. We're going to be bringing that to the continent as well. Now, what this allows is there are over 3 billion wallet users who do not have access to global financial services and cross-border trade. And here's how it works. You've got, and many of us in this room do not know the pain of what it's like to actually have, mobile device, go online, see a pair of shoes that you like, but you cannot purchase it, not because you don't have money in your wallet, but because you do not have the credential to pay for it, either a Visa or MasterCard credential from that international merchant. That's what we're solving for. It's creating a wallet interoperability platform such that wallets can connect to it and pay global merchants, and we have 40 million of such global merchants that domestic wallets will be able to pay from. Now, we announced it with UPI, WeChat, and Mercado Pago participating, and these platforms represent nearly 2 billion wallet users alone. Now, the reverse of that is the pain point that sellers in Africa experience as well. And so many of you here may have a PayPal wallet, but if you travel to Nairobi, you couldn't scan an M-Pesa merchant QR code to pay that merchant. we want to be able to solve that problem as well, such that you could take your PayPal wallet, scan a WeChat QR code or a UPI QR code or an M-Pesa QR code in the domestic market and pay using your PayPal wallet without that merchant needing to have a POS system or any other, expensive infrastructure. That we need to solve.
So then with PayPal World, when and where, when you say that you're going to roll this out?
PayPal World is going to be in 2026 until next year. And we are looking to enable as many markets as possible on the continent through partnerships, again, through wallet partners on the continent. And so we're in conversations, and we're very excited about it and looking forward to scaling that.
And we're in conversations with regulators?
We're in conversations with stakeholders and ecosystem partners and players, including wallets.
Yeah. So, I mean, this makes me think of you, Lawrence. I mean, what are the challenges here? And thank you very much. What are the challenges here in terms of knitting together legacy banking with new digital rails? I mean, this is exciting. Otto's talking about rolling out new product interoperability, but these bring challenges and headaches in some way for a regulator.
Well, hopefully it's headaches that we can all overcome, and I think the UAE has actually been very at the heart of trying to address some of those challenges. So, and very much a lot of credit goes to our UAE Central Bank. They've been very upfront in leading this digital transformation of market infrastructures. So last year they brought in the ANI, Instant Payment Service. ANI is an Arabic word that means instant, so appropriately named, and that very much allows people to send payments, receive payments through using their mobile phones, emails, QR codes, and very much it's been built on a framework. The UAE is also part of the Bank of International Settlement. They've got a particular project called Project Nexus, which is all about linking up all these domestic payment systems around the world. From a latest report, there's apparently nearly 70 countries now that have got these systems. And so this platform allows those systems to connect to each other and pilot it. And so there's 5 or 6 countries now that are very much taking the lead in that space and addressing those challenges, whether it's data privacy, getting consents. And so I think I don't know, I'm a glass half full person, and I think there's a lot of optimism to be seen in this space. And outside of the traditional areas, we've also got stablecoins. So we've seen that in ADGM. Last year we had an entity issue a stablecoin out of ADGM, and they're deploying that in countries like South America. So again, it's trying to serve that underbanked. And so I do see a lot of opportunities both in the TradFi and the non-TradFi areas.
And I consider myself a glass half full person too, so it's good to hear that. Just very quickly, we've got this far, and we haven't mentioned AI. So just quickly, to round things off, Ali and Otto, I would just love to hear your thoughts on how AI is changing what you do and how you are kind of factoring that into the future of your businesses.
I think AI is a very interesting time for us incorporating it here in the region. There are approaches of how to look at AI and payments in Western markets, I would say. Here in I would say specifically the GCC, which is a market that is very much dependent on local rails, which are running on local schemes. As we mentioned, ANI, which there is the payment scheme in UAE being launched, J1. Similar to J1, the GCC already has, every country has its own version of that. I would say the first scheme that started in the GCC was probably from the early 90s. So every GCC country has its own rail. Now, when it comes down to adopting AI from agentic payments, we've seen approaches with international schemes such as Visa and MasterCard, and I'm sure PayPal is very much embedded with what's happening. We are working with the schemes to explore what we can do here in the region with them. But what's interesting, because local schemes, they represent 80% of consumer adoption here in the GCC, which is mainstream. And it's country specific. When it comes down to adopting AI or agentic commerce into local rails, We see that the opportunity there might be towards incorporating stablecoin as a form of, let's say, a bridge for those local schemes when it comes down to pass-through or staging wallets. Since there is a lot of development to be done by the rails, and we believe that there is a lot of fast momentum that's happening within blockchain and AI that will merge those rails all together.
Thank you. And fast momentum, Otto, just very quickly, your perspective on AI?
Yeah, no, absolutely. Look, we cannot ignore AI, especially agentic commerce. I think Visa did put out stats that 47% of Americans during Black Friday use agentic tools to shop. Morgan Stanley has put out data that 10 to 20% of global e-com by 2030 is going to be agentic commerce. That's north of nearly 200 billion to nearly 400 billion. So pretty significant. We cannot ignore it. However, there is a lot that we still need to solve for. You think about it, if you're a small business today, and we are very focused on solving this for small businesses as well. If you're a small business today, you know how to get more sales. You do search engine marketing or search engine optimization, and you show up and rank a little bit more on Google. But how do you show up in a search prompt on ChatGPT as a small business? Many small businesses can't answer that question yet. They don't know how they would show up in that search and discovery process where consumers are all going to find. Now the merchant is out on funds because they end up getting charged back. We're solving for that as well because we are bringing identity to that consumer purchase too. So there is a lot of trust, that framework that needs to be built within the agentic commerce framework, and that's exactly what we're focused on while empowering small businesses to show up.
Thank you so much, and thank you all for your time. Ladies and gentlemen, please join me in thanking our esteemed panel.
Thank you, Alexis. Thank you, panelists. Ladies and gentlemen, I would like to welcome AJ Bata. AJ is the principal council member of the ADI Foundation and the CEO of Sirius International. Welcome, AJ.
Thank you. Thank you. Thank you. It's working.
Perfect. Perfect. Have a seat.
I want to start something different. Let's have a positive energy before we start this session. Let's first thank to leadership of UAE Abu Dhabi. Can I have a big round of applause for our leadership here in Abu Dhabi, who has given us this beautiful venue. Then I want to give a big round of applause for Semafor, because it's not easy to have a mission to touch 3 billion lives. So difficult mission. Thank you so much for this event. Guys, can you give another big round of applause for my friends here?
I love that. Thank you for doing that.
No, we need to create positive energy. People are so serious. Cheer up, guys.
Okay. When our friends from GEMCOR were talking about Abu Dhabi being full of institutions that are critical enablers of progress in Africa and are devoted to long-term investment, my thoughts immediately turned to ADI Foundation, which is stunning given that a year ago you guys didn't exist. I think you were launched at ADFW just last year, and in the space of a year, 25 partnerships with countries. You're launching a stable coin, and you have a very, very kind of clear and simple mission. Bring 1 billion people on chain by 2030.
Less than 2 billion, what your mission is.
Yeah, it's a modest goal.
So guys, let me give a little introduction on EDI. I have multiple hats. I'm CEO of Sirius International. That's a part of ISC. ISC is a 245 billion market cap, the second largest organization public listed in UAE. I think most of you knows that. The biggest challenge in the world, we all say that we should have another Jesus Christ and martyr. But the problem is, they said martyr should born in the next door. in my neighbor's home because I don't want to sacrifice myself. Others should sacrifice and we should get benefit of that. We are just a little bit different because we have such a vibrant leadership. So on the basis of what you said, I just want to give you one simple example that what we're doing in Africa, because it's very relevant to your mission, so we have a ground reality check. There are 4.5 billion people globally without health cover. There are 850 million people without legal identity. There are 1.4 billion people without financial inclusion. And there are 250 to 350 million people, students, they don't have a basic knowledge on the education. So on those basic grounds, we need to just look at the reality check. We all talk, we will do this, we will do that, but I just want to tell you that practically we need to have a boots on the ground. My friend here from the GEM Corps, because we're working closely, how we can bring those synergies together in Africa. We recently did one project in Kenya. So this is a very relevant project for you also in the future because I started with 4.5 billion people without medical cover. Before starting this project, Kenyan government was collecting 3 billion shilling a month. With our digitalization of the whole ecosystem, 360-degree, now they are collecting 23 billion shilling a month. Each and every Kenyan, by paying 2% from one family member, getting a full family cover. There are a lot of challenges. I don't say that it's easy. Though we are backed by a large organization, we spend $200 million on one country, but this is what we need. That's why we cannot say that sacrifice should be done by someone else. But this is a role model. Now this model, with Semafor, you can give to any emerging market. If our population is not healthy, we're not going to go anywhere. So this is very important. We should know that where are we heading towards? Okay, we're launching stablecoin. The mission of stablecoin here is a financial inclusion. How the capital of the capital, Abu Dhabi, can diversify it from here and create a financial inclusion in the emerging market where the financial things can be given to the underprivileged.
It's a combination of capital, infrastructure, ideas, and all of this is coming from the Gulf here in Abu Dhabi. But there's a certain responsibility that comes with that. There's an adage, African solutions to African problems, ASAP, you've probably heard of it. It's another way of saying that what worked here doesn't necessarily work everywhere. Can you talk more about that?
As I have addressed this earlier also, everything need to be tailor-made. What suits here does not suit in Kenya, and what suits in Kenya doesn't suit in Tanzania. It has to be tailor-made. And there is no set formula you can give to each country that, okay, what's working in Abu Dhabi? Abu Dhabi is the most secured city in the world. During COVID, I was handling all the COVID operation. We don't have a single incident, but you cannot expect that in 1.4 billion population in India or 3 billion population in Africa. So it varies, but the major problem, what we need to solve here is 99% of computation power today is sitting in one country, and we have 1% of computation power sitting in global south, where 99% user of AI will be in the global south. So what we did is we created an infrastructure, AI tools, that I can take those computation power from that side and we can give to the emerging market. That's what we need in the world. And to do that, now we are taking up 50 million token from a hyperscaler and giving that 50 million token to India or Indonesia. So you need a tool to verify that, to validate. That is where the ADI comes. We put a blockchain layer on the top of that. Another problem what we are not addressing in the world is every country has to have their sovereignty of data. You are looking for ChatGPT. Every critical data is going to that angle. Now, where is the sovereignty on your data? We have created a tailor-made solution. We're giving a sovereign cloud. We're giving the sovereign cloud to each country with the AI tools where they can get all the exploration on the AI, but the data stay on-prem in their country. So they can monetize. So this is what we need to do, more pragmatic way to solve the problem of emerging market.
We've talked a lot about expanding inclusion, widening inclusion, but how do you think about also sort of deepening inclusion and utilizing financial technology, fintech, and digital tools? There's a lot of hype around those, but how do you make that concrete and material?
So you're absolutely right. The biggest problem we have, as I already addressed, certain things that is good for US market, UK market, you cannot address to the African or any other emerging market. So what we did here, we created an infrastructure. That infrastructure layer can be interoperability, layer can be done, and we can create a synergy. We are working with M-Pesa, we are working with Safari, we are working with different biggest organization in Africa to create that synergy. If you think we from the ADGM can go and be successful in Kenya, Tanzania, then we're living in a dream world. We need to have a local partnership. This ADI mission is to create decentralized platform, democratize everything, so we can all work together. No single organization can conquer this problem of Africa or any emerging market if we don't create that synergy. And this cannot be done without local partnerships.
Perfect. AJ, I'm afraid we've run out of time, but I really want to commend you on the launch of ADI Foundation and congratulate you on everything that you've done in just a year and everything that's to come.
We have single mission, and this is from my leadership, that those live alone, they don't live anymore. So it's those who live for others, that's the only exist. Otherwise, we are as good as dead. So this is for everyone, and we are here for any kind of synergy and partnership. Thank you so much.
Thank you, AJ. We're coming to the end, folks. We just have one more headliner interview. I just want to welcome back Mohammed up to the front. He'll be interviewing Adib Ahmed, the CEO and founder of Lulu Financial.
All right. So I think we're gonna, and that was a wonderful discussion, actually, very energetic. So let's
be hard to keep pace with that.
Let's keep that up. So for the audience here who's probably seen Lulu, can you give just a bit of an introduction to Lulu Financial, what it does, how many stores you have open, and how much money do you actually move?
So Lulu Financial Holdings, we started in the year 2009. We consider ourselves as a 16-year-old startup, have a very, the core DNA of the organization is a very innovative mind with constant ability to disrupt what we also innovate. I think so in this moving time, we feel that it's ultimately very important that, you need to challenge the status quo, and we need to always look at, what new can you create for the customer. In terms of what we do around the world, if you take the numbers of 2024, World Bank data, global remittance stood at 900 billion. We in our ecosystem moved 19.7 billion. That means that, on a global scale, Lulu Financial Holdings moves around 2% of the global remittance volume around the world. When you take the element in the GCC market, we do a little over 14%. The idea is to take it to double-digit number by the year 2030.
And which markets are you most active in?
The major corridor that we cater is the Indian subcontinent, India, Bangladesh, Pakistan, Sri Lanka, so on and so forth. And of course, in the Asia Pacific, it is Philippines, Malaysia, Indonesia, the larger market. Africa is a very growing market towards us. we see a large volume moving towards Europe, especially into the UK market as well.
So so anybody who's familiar with the market here, remittances is a huge part of it, and especially for the unbanked and I guess people who don't have even like plastic, right? So UAE
just small change on that, So
yeah.
I think so. This when you say about financial inclusion in our side of the world, at least in the GCC, UAE as an example, I think we've moved away from banking the unbanked story. We've moved away from the plastic side of the story because we feel that that chapter is almost done and dusted. If you really look at this market, around 95% of the population have access to a bank account or a plastic, and that's something that has been co-led by the government of this country, especially the Ministry of Labour and the central bank jointly launched a program in 2009-10, which is called WPS, which is a wage protection system, predominantly to make sure that every person gets salary on time and has to be loaded onto a plastic. Having that program take a larger stream, today the financial inclusion story here in UAE is about giving people access to credit, a secure saving, the ability to protect them from a financial shock that could happen every decade or so, and to make sure that all this bundled toward a seamless payment ecosystem that has to be created here in the market.
No, but what I meant is like they still in a way take out the cash from the ATM and then bring it to the window and send their money abroad, or they can maybe transfer from there. They don't have access to a broader array of financial services. So where is that moving?
Yeah, so that has got better in the last couple of years. Predominantly is because of the ecosystem players. The problem is that when you swipe a card, you get charged, and for a person who's earning 2,000, 3,000, getting charged 1.2% or 2% on a swipe is a large amount of money that is moving out inside. That was forcing him to do that one. Now with the ability of Annie coming on site, making sure Jawan, which is the local switch, I think the geopolitical situation in the last couple of years has made the world payment ecosystem highly fragmented. Everybody has started creating a local payment switch. That's on a contrary, on a positive note, we could say that it has really helped to keep cost and they brought a lot of checks into the place, and of course that is allowing now that the interaction on the local payment switch to be much more economical. So that means that a person does not have to actually go and bring cash from an ATM machine. So the story of inclusion earlier was cash to cards, card to digital, and then the story now today rests on mobile technology. But I think so we've moved away from that. For us, it's financial inclusions today also has to be a part of purpose-led transfers.
And that's the thing. So they're moving towards the digital, moving towards the app. You yourself as well has had to restructure, I imagine, or you said you're still a startup 15 or 20 years in. That's fintechs encroaching, new technologies emerging, and then you have to bring your customers with you. How are you traversing all of these hurdles?
I think so in the earlier times, and if I were to speak 5-6 years in the past, we would say that there was a large friction between legacy organizations and fintechs, which led to a forced level of innovation. But today what we see is that both the legacy organizations and the upcoming fintechs has really understood that the need of partnerships and collaborations. Because of that, I think a lot more innovation has suddenly sprouted out, and the ability for them to scale it to a larger audience base where there is no, a very cautious level of keeping customers to myself. It's about making sure that, if I have a technology and another bank has a technology, how do I put these two technologies together so that I can create a better story for the customers?
So, but how do you go about still protecting your core, right? If remittances, if everybody goes digital, I can get onto an app and undercut your fee by whatever, 50% sometimes.
I'll give you an example for that. So everybody in this market does remittance. So from a supermarket chain to ride-hailing apps to banks to fintechs such as us, and a local exchange house, everybody does it. Now, the story of Lulu Financial Holdings here in UAE, we operate under the brand Lulu Exchange and Lulu Money. Same point of time, we power innovative companies with the aspirations to become insight. So if you look at the ride-hailing app Careem, we actually power their Careem Pay, from behind. And we have Aspora, which we power up, and these kind of companies, when they come into the market, they come looking for people who have already seen that pain ecosystem and they've gone through that ecosystem. Now they want a partner who's enabling them to enable a lot more services to their customers, but wants to have that learning so that they don't have to burn a lot of money to understand those kind of learnings. We as an organization, we have no problem with that. So if I don't do it, for sure somebody else would do it in the market. If I'm able to give my customers a better service, a better rates, instant transfer, then it's about the customers to choose whose front end is more accessible and whose front end is more comfortable for them to use, and they're able to use that one, And then we, on one side, will be able to power using the 16 years of learning that we have in terms of backend integrations. We've connected to, on an API connect, we are connected to almost 140 banks worldwide. We have around 200 countries that we have instant payments and settlements that is happening inside. So we've already created the rails. If I can give it to other peoples also, it's going to be on a mutual benefit for both of us.
Comparatively, the growth on that, so you said, I think you said 18.7 billion a year in remittances is what you're...
19.6, we'll get to around 22 billion.
Yeah, 22 this year. What is the breakdown between individuals and this kind of B2B model that you have going on?
I think around...
growth as well.
Yeah, 90% of our business today sits on consumer C2C payments. B2B payments is largely an undisrupted aspect. If you really look at the recent data around when it comes to the large corporates, and you leave the large corporates, if you look at the SME sector, I think so this sector is highly poised to be disrupted in the near future. The global target is that by the year 2030, we are looking at payments volume to the line of close to 46 trillion, if I'm not mistaken, which is happening on the SME sector. Now, the SME sector is not always having a seamless journey when it comes to payments and settlements, and here is where organizations such as us are trying to put up rails, again in partnership with banks, with new forms of payments, which is stable coins and so on and so forth, which is coming into the market. But at the same point of time, it is very important for us because every 10 market that we operate under, we are a regulated entity under the central bank of that country. So, we'll have to make sure that what is permissible and what is not permissible.
Well, you already got to the blockchain / stablecoin aspect of it, but it seems to be that's where a lot of the frictionless money movement globally is happening. And I'm wondering, what are you doing to get into that, and how do you kind of like build up the side business at the same time as keeping your core protected?
Yeah, so if you really look at last year during the Abu Dhabi Finance Week, we signed up with Circle. Today, we work on the rails of Circle in terms of stable money and stable coins and settlements and payments on their rails. And while that is happening, if you really take up the statistics, the use of stable coins has been largely increasing around the world. And I think so the last year's statistics says that, it's still 1% of the traditional money movement that is happening around the world. So it has a long way to go. However, it's been looked very cautiously through many organizations and many central banks around the world. Because there are aspirations of central banks to create their own stable coins. Of course, the recent news of Eurozone coming out with their own Euro coin, which would then, it still is going to create friction about whether you're going to use the US side or you're going to use the euro based, and I'm sure that regionally Africa would be able to bring out a coin of its own, and Abu Dhabi has just launched the AD coin here. So again, the interoperability will become the biggest challenge, and any organization that is able to solve that interoperability problem is going to be the crucial element of success for them.
you mentioned Circle. Obviously, they're working on. They just got a new license here in ADGM, and they're working on what they're calling. I think that's something OS, like the operating system of this. Is that the main friction? Because you know, how much of stablecoins are you moving around? Like that's a big question. Like,
I think it's for us it's a very small percentage at this point of time. Predominantly, why? Because you know it needs to be blessed by the central banks of the regulatory countries that we operate inside. Currently, we still I would say 99% of our entire usage is still happening on the traditional rails. But the demand of customers, you know, so this all moves with the enthusiasm and demand of customers to be on those kind of rails and wallets. And when the customers' needs are there, organizations such as us would start to tilt into, you know, into moving more into those kind of rails.
so if I walked up to a Lulu window and I have my wallet, can I get fiat from there?
Yes, yeah. I mean, can you get?
Can I get dollars or dirhams from my stablecoin, from my USDC, USDT?
Yeah, so you could do that by on-ramping and off-ramping using our rails. Yes, that is possible. Yes, it's possible in general basis.
Well, you heard it here. Thank you so much for your time. We really appreciate having you here, and thank you all for listening to us.
Thank you very much.
Thank you very, very, very much, Mohammed Adib. Just another big round of applause for all of our speakers, all of our presenters, our journalists. Thank you, Mohammed. Thank you, Alexis. And a big thank you to each and every one of you. This was a big week for Semafor. We were honored to partner with ADFW for the first time, bring many of our top journalists to the stage to moderate panel discussions. We hosted a video studio this week, interviewing top executives. And we also launched a new product, the Semafor Gulf Global Capital Edition, which you see here in print version. We launched it in partnership with First Abu Dhabi Bank. We're very, very proud of our journalism. We invite all of you to continue following our work as we cover the most consequential global conversations. And if you're not already subscribed, go to semafor.com. You can subscribe to Semafor Africa, to Semafor Gulf. It's free. Thank you again to our remarkable speakers, to all of our partners, the Gates Foundation. Thank you, GEMCorp. Thank you, ADI Foundation. Thank you, ADFW, again, for all of your hospitality. Just lastly, I want to tell you that we're taking this conversation next to Nairobi. So mark your calendars, March 2026. We hope to see you there. Thank you, and enjoy the rest of your ADFW journey. Thank you.